On board our technical expert today, Ashish Kyal, founder and CEO at Wave Strategy Advisors, to understand what we can make of this market going ahead. Ashish, thanks so much for joining us and taking the time out. I have one question for you. 24 hours earlier, we've been celebrating the so-called recovery of the markets because more than 1% uptick coming in on Nifty yesterday. Everything seemed good. Today, it's been an exact reversal of that, more than a 1% cut coming in on the Nifty today. What are you making of these moves? And while we understand that this market correction is here to stay for a bit, do you think every day going ahead is going to be as volatile and the cuts on the Nifty are going to be as deep as the ones that we've seen today?
Hi, afternoon to you and all the viewers. If you look at Nifty, definitely we saw a very sharp rise that happened yesterday, but a very quick decline also that we are seeing today of more than 280 points. So the volatility has been high, and this is expected because after such a sharp fall that we have seen from around 26,000 mark to around 23,840, 850 on the Nifty, we are seeing some kind of a recovery. And that has happened because of the global event. We can clearly see that how the US has been sharply up, and we were anticipating early on then the US markets and rallied a day prior itself. So overall, I think we might be consolidating in a broad range for now because there looks to be some sort of confusion where we have a positive event, but there are some earnings issue and we can clearly see some kind of a pressure building up. So overall, a very broad range bound movement or consolidation is possible. And we can see that the upside hurdle, immediate hurdle on the upside is going to be around 24,320 for Nifty. And on the downside, we have a support around the gain level of 24,100. So I think short term, we will consolidate in this 200 points range, and the breakout of this range is going to set the tone in that specific direction. Having said that, I think the overall market is going to be under pressure. We are seeing some kind of a deep curve that has happened on a few of the stocks. If you look at trend, what happened today, also a very sharp decline is what we can see in the stock. So market is punishing everything that is little below estimates also. And we can see that the pressure is not only on Nifty, but Bank Nifty was also down by more than 0.5%, and the financial services nearly 1%. So in a nutshell, expecting a range, a broad range bound movement, a consolidation before the trend emerges.
So there you go. Those are the support and resistance levels that Ashish sees in the market as well. But Ashish, given that there's a sharp sort of correction that we've seen across the board, a shade of red that we've seen, lots of buying opportunities, which are the counters that you're keeping on your radar then?
The first stock is going to be KEC International. We can clearly see very sharp up move in today's session. The volumes have picked up pretty well. The stock touched 52-week high. So that is suggesting that a relative outperformance in this kind of a market, it's bucking the trend and trying to move independently. And that's a positive sign. So one can create long positions in KEC International, keeping a stop loss of 1,010, expecting a target of 1130. And the next stock on the buy side is going to be Coromandel International. We can clearly see again the stock is just breaking out on the upside from a flat pattern and resuming the upward journey. Looks like the target for the stock is going to be around 1905. That should be achieved over short term. Stop loss can be placed at 1715.
Okay, Ashish, thanks for taking the time out and joining us. So KEC International and Coromandel both on the upside is what Ashish is spotting for our viewers. Thanks, Ashish. On that note, we'll let you go.